So we are in earnings season in earnest, and it would be a failure on my part if we didn't get a preview of what's going on from Taylor from LifeGoal Investments. Because again, he's a 10-year Wall Street veteran, and he's the guy I go to for what's going on in the market. So Taylor, thank you for being here.
Yeah, I'm excited to do this. Earnings season is like the highlight reel of what's going on every single quarter. I always say this is like when your kid brings home their report card, and you're
Yeah,
the parent as the investor, and you go, "All right, how did this little rugrat do this quarter?"
there you go. So I want to talk about kind of four big buckets generally. We'll do big banks first. We'll do
Yep.
regional banks second. We'll do tech, kind of the Magnificent Seven. Anybody else you want to talk about? And then we'll do a catch-all for everybody else. So first, big banks. What did you see when the big banks reported?
Yeah, big banks are benefiting from this net interest margin, world that we're in right now, where they're
Yeah.
paying out. You think about a J.P. Morgan, right? Chase Bank. Chase Bank is paying out, pennies on interest rates, and then they're investing on the back end in T-bills and whatever it might be, rolling 5%, 5.33%, something like that. Like that is
Something
a
like that.
profitable environment for a big bank.
Yeah. Yeah. No kidding. Yeah. The big banks were, again, that's just not where the story is. Um,
Correct. Correct.
when I looked at the big banks, I think the only one that was kind of interesting to me, and you brought this to my attention, so I looked for it on purpose because of you, was Bank of America.
Yep.
And they're just large, unearned or unrecognized loss on their bond portfolio. That was kind of shocking.
Yeah, so what they did was Brian Moynihan he's under a microscope right now, and Jamie Dimon put him under that microscope
Yeah.
as a competitor because Jamie Dimon pointed out and said, "Hey, everyone, go look at Bank of America's balance sheet because what they did was they extended duration on their bonds. So they went instead of buying 6-month treasury bills or 3 months treasury bills, they went out and bought long duration 10, 20-year bonds. And obviously that has been a brutal, brutal place to be invested as interest rates have continued to persist higher, right? The 10-year touched 10%. I'm sorry, the 10-year touched 5%. And as bond rate goes up, bond prices come down. And so that's what they've realized, or unrealized, I guess is a better
Yeah.
way of putting
Unrealized loss. Yeah. There you go. They've
it.
realized and unrealized. Yeah, exactly.
Yeah,
So
exactly.
if the big banks aren't the story, I guess that means the regional banks are the story. And there have been some ugly numbers from the
There have.
regional banks.
There have. Yeah, the Federal Reserve and kind of their policy and the Treasury at large and their policy has backed regional banks kind of into a corner. So they have not made the overarching sweeping comment that if a bank goes under, we will back them. But the market perceives that as, okay, question mark around regional banks that aren't systemically important. No question mark around Chase. Chase is going to be bailed out. JP Morgan will be bailed out if something happens to them. So then what happens is person that's the depositor looks at this and perceives that as Chase is safe, regional banks potentially aren't safe. So the knock-on conclusion of what then winds up happening is regional banks then have to increase what they're paying out on deposits to kind of bring customers over and maintain them there and say, listen, you might be taking a little bit of risk here, but look at the reward that we're paying you on your savings rates, whereas Chase Bank is paying you literally nothing. And then all of a sudden, that net interest margin between what they're paying on their savings and what they're actually getting on the back end via loans, via bonds, whatever it is, those big banks are really wide. But all of a sudden, those regional banks are paying 4% on savings rates. And all of a sudden, that net interest margin is razor, razor thin. And you can tell what's going on in regional banks. We talked about this on the last episode briefly, looking at the KRE index. That is the regional bank index. And it is on the mat, on the floor, has not gotten up off the floor. It's down about 40% this year. That's a rough number, so don't take that to the grave with you. But it's gotten a little pop back in the spring after SVB kind of settled in and people said, okay, this isn't going to be a massive spiral event. And now they're trading back off again.
Yeah, I mean, yeah, when I look at the regional banks, there's just no good news, right? Their income statement, net interest margin is where they get a lot of that. Not great, going the wrong way.
Yep.
Then you flip over to their balance sheet, cash deposits going the wrong way, right?
Yep.
Capital flight.
Yep.
Then their lending, right? The revenue side of their income statement, not doing great because they can't lend, right?
That's it.
They don't want to lend. Then their balance sheet, as far as assets, they're seeing more and more reserves for bad debt. They're going to have to extend and pretend. There just has to be less regional banks in a year. We're going to have, well, I guess I'll call them shotgun marriages for lack of a
Yep.
better term.
Yep.
organized by the Fed. I mean, just this quarter was dramatically worse than the previous one.
Yeah, yeah, I totally agree with you there. And to your point, it's not going to be outright bank failures because nobody wants a bank failure, but we do want to see things get more sturdy on the banking front. And where that can take place is okay. Jamie Dimon can gobble them up. Like
Yeah.
that's the reality of what's playing out. And right now, the overall deposit rate for Chase, Jamie Dimon's JP Morgan, is above the threshold of where it's supposed to be. I think it's 10% of the overall
Mhm.
deposits in the country.
Yep.
But
Yep.
guess what? That can go higher in the event of necessity. And that's
Well,
what
that's
we've
what they
seen.
did with their last acquisition. It
Correct.
was an exception,
Correct.
right? Yeah. So in times of emergencies, JP Morgan can get bigger. Well, if we
Correct.
just hit the banks, one doing okay, one getting smoked. What about the Magnificent Seven? What have we seen from tech and tech in general?
Yeah, so it's been a mixed bag, right? Some companies have done great, some companies have not done great. And so you look at ones that have done great. Microsoft reported what seemingly was very strong earnings, and some of the AI type fairy dust actually seems like it might be coming to fruition a little bit. And they're actually seeing pickup in the subscribership and membership for paid services when it comes to AI. And then you flip the script and you look at Google. Google was down 10% in a day. This is like the
Oh,
fourth or fifth largest company in the world. 10% in
that,
a day. The market cap movement on that is absolutely astronomical. And that
yeah.
is the other side of the equation where they had a lot of AI robust movement coming into this. Their stock was doing really well, even relative to the other Magnificent Seven. And now the market says, okay, show me. And you didn't show
Mhm.
me what I wanted to see. And therefore, we're starting to knock off the top of that froth of where AI fairy dust had been sprinkled if it's not come to fruition. They just haven't executed as well as Microsoft.
Yeah, when I look at Amazon, Microsoft, and Google, there seems to be a story around cloud,
Yep.
right? And Google missed, Amazon and Microsoft exceeded, I believe.
Correct. Correct. You're
And
right.
the other thing that was interesting about Amazon was their advertisers. Advertising blew up. It was like
Yep.
$2 billion or something. And again, think
Yep.
about Amazon. They don't make money or very much money on the stuff. But if they're starting to get additional profit streams like advertising on stuff,
Yep.
that
And
gets
that one's
pretty
interesting
interesting.
to me, to be honest, because I would not have said that. I would not say that you've seen a pickup, and obviously you have, right? I'm wrong, but I would not have said that Amazon's going to see a meaningful pickup in advertising spend. That's a pretty good traditional leading economic indicator to
Oh,
say
for
people are
sure.
willing to shell out money and the back end profits will come to fruition based on the strength of the economy. But that's what played out.
Well, I mean, I actually think what's going on is we're seeing almost a switching cost. And what I mean by that is historically people have advertised on social media, right? Meta,
Yep.
whatever they are, the other ones, Snap, all these
Yep.
folks.
Yep.
Maybe people are going, why the hell are we doing that? Why don't we just go to the biggest retailer on the planet and advertise there? Because
Why
they're going
not?
to go there and
Why
shop
not?
for toys.
Exactly. You know you have a captive audience. This is like push versus pull marketing. Pull
Exactly.
marketing is what Amazon's doing, where they know you're there to shop. So
Yeah.
therefore,
It's
retailers
like
just
an
go,
end
"Hey, I
cap,
know
right?
people are here."
Yeah,
It's like advertising at the grocery store. You know people are there
exactly.
shopping, as
Yeah.
opposed to advertising on Instagram trying to draw them into the grocery store, or
That's
grocery
exactly
store is
what I
not the
think.
great
That's
analogy.
what I think's going on is Amazon has finally figured out how to in a grocery store. I worked in retail for over a decade, or I
Yep.
don't know, 8 years, and end caps are where it was at. That's where the biggest thing went on sale. That was the highest margin stuff went there.
Yep.
And I think Amazon has found a way to have end caps, and it makes perfect sense, right? Why do you want to advertise on Instagram or TikTok or wherever where they have to get off that and go to somewhere else to buy something?
Right.
And I think Amazon might shock us, and they may become one of the biggest advertisers, profit centers on the planet here quickly.
Yeah, if you're looking at an advertiser, you want the least amount of work done by
Yeah,
the
least
consumer,
friction. Yeah,
the
yeah,
least friction, the least clicks, you want your sales funnel to be as short as possible. And if you're going directly to where that click is going to be a purchase,
yeah.
then that's a great place to advertise.
That's the spot to be. But of course, it won't be cheap. It'll also be very high profit for Amazon. So it makes
Correct.
perfect sense. We have what? I think we have two of the Magnificent Seven still to report. Apple this week, and I think Nvidia is a couple weeks out. They're like, a couple
NVIDIA is
weeks out.
actually in December. They're an off-cycle
Yeah.
reporter. So NVIDIA is going to be an interesting one because one, that's going to be a little later which it gives
Mhm.
us a little more time for the economy to chew through what's going on. And what you'll see there is right now, maybe the ultimate commodity in the world
Yeah.
are microprocessor chips.
Yeah.
Microprocessing chips, I should say. So, right? So just chips, semiconductors. And what you have is this rush to buy them. And so they're on back order, right? They're on back order because they can't keep up. Places like Nvidia. So now people are double ordering, saying, hey, when these
Yeah.
become available, I want mine first so I can get ahead on AI and things like that, which they power. Does that back order backlog maintain if we get some more tough
Yeah.
economic news along the way? And
Yeah.
that's the big outstanding question. It's funny that they come as a late cycle entrant because it will give us a little more time to start to get an idea. And as you know, not telling you anything you don't know, there's a lot of hopium built into Nvidia, and they have delivered. They've delivered. So
Well,
it's
over
been
one would argue over-delivered
correct. And
so
that's why
far.
you've just seen that stock price just shoot up so meaningfully. But do they continue to do that? And if they don't, what happens on the other side because of it?
Yeah, exactly. We do get a kind of sneak peek into an NVIDIA, I don't know, little cousin or whatever. AMD, I think, is tomorrow.
Yep.
Um, any thoughts on AMD and Apple as we, kind of get into this week?
It'll be interesting. So, I mean, I'm more interested in Apple,
Okay.
admittedly.
All
Apple
right.
is the titan, right? Just because it's the largest company in the world. Their market cap is now they've had a 15% regression. So it was 2.6 trillion, I believe, and now it's whatever that math equates to.
Mm,
So more in that 2 trillion ballpark. But that is a market driver. And so
okay.
we think about the sell-off that we've seen in the market. Largely that's predicated on moves and people like Apple, right?
Mhm.
Every single index fund in the world owned a meaningful portion of Apple. And so if that 6% holding inside that investment vehicle starts to move downward, it perpetuates a portfolio down much more than it does in something that might be a 0.6% weighting, which is
Okay.
where a lot of holdings are.
Yeah. Well, if I'd be remiss if we didn't talk about Tesla in the Big Seven. They obviously, I
Oh,
think, they
yeah.
reported 2 weeks ago, and you and I were we missed last week. So, any thoughts on the Tesla earnings?
Yeah. I think what you're seeing with Tesla is just the fact that they're coming in massively under market to try to sell cars.
Yeah.
And their profit margins just continue to get squeezed. Now, they were out at, and I'm going to rough numbers here and don't hold me to these, but they were out at 20% margins, somewhere in that ballpark, even north of that, I believe. And
Hmm.
now what they're doing is they're coming more in line with a traditional automaker. And what they're trying
Yeah.
to do is just undercut EVs around the world and get their product to market. And for the first time, what you've seen now is Tesla actually has inventory on their website, which
Hmm.
is interesting because before it was always go on, pick what you want to order and order it, and it'll ship to you when they get done with it, which was always an interesting, like, how long is my car going to be before it gets here? But now
Yeah.
you can go on and say, hey, I want that gray car that has the
Mm,
performance package, etc. And they're ready and they're built and they will ship immediately. And that's
yeah.
just something that, you've had an inventory build there.
It's very interesting. I mean, so I actually read articles about EV because I think it was Ford. They basically said, "Hey, we're not going to invest in EV, or we're going to delay $3 billion." GM said this, and then Mercedes.
Mercedes, that's the big one. Yep.
Yeah, Mercedes basically said the EV market is brutal. Uh, pricing war,
Yep.
not sustainable. Like,
Yep.
oh. So
Yep.
again, I think Tesla's, trying to take out their competitors and reduce competition.
100%. What Tesla has done will either be genius or it won't, right? That's Elon Musk in a nutshell. But Elon Musk made a really interesting business move years back.
Mhm.
He open sourced their how they build a car. And he said to himself, I'm the incumbent right now. If someone thinks electric vehicle, they think Tesla. And therefore, I'm willing to open source this so we can have more batteries produced around the world. And then what we'll have is more charging points because more companies will be creating them, et cetera, and create this more systemic overall industry than where it was in the past. And he said, listen, I'm going to give up our technology, let other people build them exactly like we do if they want. And at the end of the day, I know people are going to come to us. And so now they're kind of going the opposite route where they're saying, okay, we actually encourage competition to again create a more systemic industry. And now they're looking at this and saying, now we're going to go in and undercut the knees from all of our competitors that we wanted to get built at. And it'll
Yeah.
be interesting because I don't know yet if there's enough EV infrastructure to have this be a premature move, right? So if we did have more companies and they didn't undercut on a price perspective, Tesla that is, and therefore there was more competition building, there would be more charge points. There would be
Right.
more rural areas that now have charging stations, which don't have charging stations at the moment. And is this a premature move to undercut competitors and therefore the industry doesn't proliferate as much as it once would have?
Yeah. It's going to be interesting to watch Tesla. It'll be a story either way. Again, I'm not somebody who plays a momentum stock, so I don't touch that one with a 10-foot pole. But let's talk about just other earnings, right? I saw McDonald's this morning came out, basically 8.8% growth, global growth. What's going on just generally with consumer stocks and others that have reported?
Yeah, I think what we're seeing is continued consumer strength, honestly. And it's something where at some point, and this was long premature. The market said, hey, higher interest rates are going to affect consumers. And they have not yet to any meaningful degree. And it's interesting. Um, this is a guilty confession, I guess. We go to with my family, we go to McDonald's once a month or so because they have an awesome playpen and the weather isn't always nice in the Northeast. So the kids run amok and it's amazing. We'll meet another family there. But what I've been shocked about is McDonald's isn't cheap.
Yeah.
Like we get, sandwiches or whatever for the kids. And it's like, if there's 5 of us there, well, 4 of us, right? The little one doesn't eat that stuff, obviously, but 4 of us there, it's a 42, 43, $44 dinner. And
Yeah.
you're like, okay, that's not cheap, right? It used to be
Mhm.
half that not very long ago. And now it's seen this massive pickup. And how long is that sustainable? I don't know. They've done a good job recently by increasing margins, but will
Yeah.
that sustain? And that's
Yeah.
a broader story too. Is can profit
Chipotle,
margins
same story. Chipotle, same exact
exactly right.
story. Yeah, they're
Exactly right. Chipotle, we used to go there a lot because it was so cheap for us to literally spend less money and have dinner prepared for us as we're scrambling around. My wife works. We would go there and it would be $7 a burrito.
right,
Now they're like $12 a burrito. Like that is
right.
huge.
Yeah. It is being very interesting what's going on in the economy with earnings. Again, I think so. Earnings for Q3 have we had enough to kind of call earnings recession continues, or we haven't had enough data yet?
We're not there yet. Nope.
Yeah.
And we really shouldn't see another negative quarter of earnings. So the
Okay.
expectation was negative zero point 0.3, and almost every single time companies supersede expectations,
Yeah.
right? So something like 78%, again, don't hold me to that one, but that's historically what you have overcoming the hurdle. So if you have 78% overcoming their estimates, you're going to
Yeah.
get a positive number. But at the end of the day, you look forward to next year, and we've talked about this, and I've shouted this number from the hilltops because I think it's so important. 12% earnings expectation is what expected out of the
Wow.
S&P 500 next year. 12, right? So we're coming from negative to 12% next year. It's something where again, these companies have to perform or otherwise you're going to see stock compression.
Yeah. Very, very cool. Well, where can people find you, Taylor?
Yeah, find us at LifeGoal Investments on both Instagram and TikTok, putting out daily stuff.
Thank you, buddy.
Thanks, Michael.